If you receive your first credit card in or around the time that you started college, or when your credit score wasn't that great, you probably didn't have a high spending limit. And over time, you've realized that your spending limits did not cover certain purchases you needed to make. If that's the case, then it's time to ask your credit card issuer for a credit line limit increase. However, this does comes with its ups and downs, and first you need to determine why you need an increase in the first place. If it's only to buy yourself things that you can't afford with cash anyways, and stop right there, because you're only getting yourself into trouble and debt that'll take you years to pay off. Second, you need to realize and determine whether you've been a good customer for at least 6 months with on-time payment histories and that none of your cards are maxed out. Otherwise, your chances of getting approved will be very low. So let's learn more about the pros and cons of using a credit limit increase. Now, some of the benefits of having a high credit limit will help you have some sort of financial flexibility, and it may help your credit score as well. So if you're trying to use your credit card for all your bills and expenses, your limit may not be enough, and you may also be trying to make big purchases on that card. And just a little bit more of a spending limit will allow your transactions to go through without no problem. If you have a high spending limit, you can also enjoy card benefits like cash back on all your purchases, which will definitely be useful in the future. A high limit also means that you'll have a low credit utilization, and this also definitely helps improve your credit score, because FICO looks at your credit utilization in about 2 ways. The first way is a per card utilization, which is how much you owe on each individual card compared to the credit line available on that specific card. The second way is an aggregate utilization, which is the amount that you owe on all your credit cards compared to the sum of the credit lines. This is exactly how FICO determines amounts owed. And in the FICO scoring model, amounts owed accounts for 30% of your credit score. Your credit utilization will go down, and your score should increase if you maintain the amounts of the credit in use and ask for a credit line increase. Now, let's go over some of the disadvantages. There are some potential disadvantages though, so you should take this in consideration before you go on a credit limit increase frenzy. Credit issuers may pull your credit report to evaluate existing credit, and these inquiries can either be hard pulls, which do affect your credit, or they can be soft pulls, which don't affect your credit at all. But too many inquiries in a short amount of time will knock some points off of your credit score. If you had a hard pull on your credit report recently, it may be best to wait a while. You can always call your credit issuer to confirm if they really do make a hard inquiry on your credit report when considering a credit limit increase. Increasing your credit limit can also increase your debt. And even though you'll have the power to make bigger purchases with an increased credit limit, it can put you at risk of buying things that you can't really afford, and you'll end up racking tons of interest charges. And if you can't pay your balance, especially if you can't pay your balance off. So make sure that you never spend more than what you actually can afford in a month. A credit limit increase can be a great way to reduce your credit card utilization and your credit score overall. However, it can also work against you if you don't know how to budget yourself and stay organized. So make sure that before you ask for a credit limit increase, you take all of this in consideration. If you know how to spend responsibly and have good credit, you shouldn't have an issue at all increasing your credit limits. And in turn, you'll have more financial flexibility overall. And just a rule of thumb, as I've discussed in my other videos, when it comes to knowing exactly how much you should spend to stay comfortably within your credit score or potentially increase it, you want to go ahead and take whatever credit limit you currently have, divide by 3, and never pass that. If you feel that you need to use more for that, then ask for a credit limit increase, but make sure that you've been in good standing with that bank. This way you can increase the chances of them approving the increase overall. This also allows for you to be able to afford to pay these credit cards by maintaining at a 30% utilization. I mean, you know your pay history more than I do, so you can always adjust. But 30% is what I usually tell people. You can always use 20 or 10% as well. And also, don't consider your credit cards as a bill, because at the same time when you transfer money or make a payment from your checking to your credit card, then that same money is available right away. You're not really using it. You're just using it in a form of credit, which in turn, if you are trying to buy a home or car or leverage your credit later on in the future, will definitely benefit you in the long run when it comes to proving payment history over time. That being said, guys, I hope you liked the information on the video. Please leave any other suggestions that you have in the comments below, as we're gonna go ahead and continue contributing to this community of healthier credit. So guys, thanks again for the love and support. Make sure you comment, like, subscribe, share with family and friends. And until the next episode of Keeping It Real with Credit, peace.